Fannie Mae and Freddie Mac do have some guidelines that really are advantageous if it fits. It's children wanting to provide housing for parents. It can be done as a primary and not investment. We launched our new system. It's called AIM. In addition to that, we actually offer a free point of sale. They can send a link right to the borrower. The information gets filled out, super simple questions to the borrower, and it gets uploaded to our system, and the broker's notified that the borrower has done their application. We want people to know that we do conventional conforming, and we just want to change the perception that we're just about non-QM.
Hi everyone, Thanksgiving is right around the corner, and what a perfect time to thank you for your collaboration with us. Thank you for trusting us, and we truly appreciate you. Now we'll jump into the digest, where we have Lori Welton with us, explaining all the questions you need to know about conventional loans. Hi everyone, thank you for joining us today on our digest. Today we have here with us Lori Welton, Senior Account Executive, to tell us all we need to know about conventional financing. Thank you for being here, Lori.
Hi, Serena. Thank you so much for having me. I appreciate it. In fact, it's a pleasure to be here in the new building. It's so beautiful. I pulled in and I saw the A&D sign, and it's just a beautiful experience. Great building, very modern.
Isn't it?
Yes.
It's very nice to work in it.
Yeah.
So I have a couple questions for you on conventional financing.
Sure.
The first is going to be, how would you suggest that brokers really get to the bottom of figuring out if conventional financing is a good product for their clients?
There's a lot of ways to answer that question. Well, first off, I think the most important thing to know is that A&D Mortgage actually is known for our non-QM, but we do conventional conforming and FHA loans. We have the ability to do a little bit of everything. So when a broker is looking at a borrower and they're trying to figure out what way to go, obviously one of the first things they need to do is understand if the borrower can prove their income with full income documentation, right? So not everyone can show their tax returns, not everyone is a wage earner or gets a pay stub and so forth. You know, one of the most important things is obviously they need to identify the income, see if it's going to work. Fannie Mae, Freddie Mac, the agencies, they have very specific guidelines, and usually, you know, you fit or you don't. It's kind of like checking the box, right? There are exceptions built into their guidelines, but those are also kind of specific. So we have very few overlays. We follow the AUS. So when the broker runs the AUS, they need an approved eligible or an accept eligible. And, you know, they can use DU or LP in our system. They can go either way. So they need to consider, one, the income, the mortgage insurance, if it's applicable, right? It's just another factor that they have to factor into the DTI or another variable. They also need to consider affordability. So the agencies, Fannie and Freddie, are really focused on affordability with Home Ready, Home Possible, and there's actually 4 97% programs. We offer all 4. 2 of them are more income driven or income specific, like Home Ready, Home Possible, whereas the standard 97, which used to be called the conventional 97, and Home One, they can go to 97% for any income level. It's just that one borrower has to be a first-time home buyer on those. Fannie Mae and Freddie don't require a Home Ready or Home Possible borrower to be a first-time home borrower. So you can do a rate and term refi on those, which a lot of brokers don't know either. In addition to all these, you know, different factors, there's also the fact that, you know, the lender that you partner with is important. Here we always have a plan B, right? So they might come in going conventional, or they might come in, you know, going non-QM. Talking to the account executive and really talking about the loan and what might work and having a plan B. Like I do that all the time with brokers. Their borrowers, they'll talk to me about the loan, and then I'll say, look, in case this doesn't work, you know, if the debt ratio is tight or whatever the case may be, you know, we have this other option. So I like to plant those seeds so they know they have another plan.
Yeah, I love that. And I also love that you give other options. I mean, that's super important. I think that's one way we're very malleable, right? We're able to fix, we're able to adapt, change our program if we need to.
That's right.
So Lori, my second question for you is, are there any specific scenarios or properties that you would suggest or lean more towards going conventional financing?
Okay, so that's actually a really good question. So with regard to the properties themselves, conventional conforming, like if you're doing condos, look, you have to fit, and there's a lot of rules around condos now, and a lot of times they're non-warrantable, and it forces you into doing a non-QM loan. As far as properties in general and appraisals in general and that whole part of the transaction, It's gotten a lot more universal over time, really since TRID, and we follow all those same rules, just like most lenders, and the broker's been removed from that part of it. They don't order the appraisal from the appraiser. The AMC is in the middle, gets delivered to the lender. So we do and follow all that for all transaction types. As far as scenarios, there can be some scenarios because Fannie Mae and Freddie Mac do have some guidelines that really are advantageous if it fits. And I'll give you an example. There's an occupancy guideline that very few people know about, right? It's children wanting to provide housing for parents. So a broker may call and say, hey, Lori, I'm interested in doing an investment property. My borrower is buying a home and actually their mom's going to live in it. Well, we have a guideline for that. It can be done as a primary and not investment. And Fannie Mae and Freddie Mac both have those guidelines. We have very few overlays. So, we read the AUS, we'll follow them. But talking to the AE is very important. And having an AE that knows those guidelines or can uncover them is also super important. So we kind of pride ourselves on doing all of it. So.
Okay, Lori. So my next question for you is, do you have any suggestions on tools and technologies that can really help the broker and even the client through the conventional loan process?
Absolutely. First, I want to start by saying that a very wise person many years ago mentioned or told me that we used to be a mortgage company with technology, okay? Today, we're pretty much technology companies that do mortgages, okay? So the technology piece is huge. It's very important. Thankfully, we launched our new system in April. It's called AIM. There's a lot of things that a broker can do in AIM. Let's just start with registering the file, seamless uploads. That helps. In addition to that, we have all types of income calculators and income calculation, like for bank statements, let's say it was a non-conforming loan, a non-QM loan. But on the conventional side, you can still take advantage of all of those things. Even loyalty points, that helps the borrower because the broker can use those points that we give them for their loyalty and give it back to their borrower in the form of credit for the underwriting fee or the administration fee, et cetera. Maybe time on a lock, so they're not paying for an extension and so forth. Technology plays a really, really big piece. And thankfully, we're a technology-driven company. We have a great IT department, as you know. And I was super impressed with that, from day one here. So technology is a huge piece. Now, the other thing is, let's start with the actual brokers originating the loan themselves. Back in the day, years and years ago, there was only a couple of loan origination systems, and they were expensive. Today, there's so many online platforms that they can use. In addition to that, we actually offer a free point of sale. They can send a link right to the borrower. The information gets filled out, super simple questions to the borrower, and it gets uploaded to our system, and the broker's notified that the borrower has done their application. So, we offer that at no charge. So there's so many things that not only we do, but that are at the broker's fingertips, and they just need to talk to their account executive. That's really, we're their advocate, we're their ally. So, yeah.
You're the fighter.
You're the fighter. Yeah.
So, Lori, this is an important question.
Sure.
We all want to stay updated on agency guideline changes, selling guide, Fannie Freddie. How do you suggest that we stay updated on those things?
That's a full-time job, first off, for anybody, for the lender, for the brokers. Guidelines change constantly. Fannie Mae, Freddie Mac, the agencies update constantly. We do, I think, a really good job of communicating to our customers as best we can about the changes, but talking to the account executive, that's really important. The second thing is that the brokers can go online to Fannie Mae and Freddie Mac and sign up for updates themselves. I get updates all the time automatically. So when things change, I'm aware of the guideline changes and whatnot. But even knowing that, when a broker calls me, unless it's something that's very cookie cutter, I still double check it. There's no harm in being accurate and sure. So it's worth doing, but it's a full-time job, no matter what.
Yes.
Yeah.
Lori, are there any updates here at A&D Mortgage regarding conventional loans?
Oh, absolutely. First off, I think we do a really good job on conventional conforming loans. I do. And that was a pleasant surprise to me, right? Because I too knew A&D Mortgage for non-QM. Yeah. So that was a pleasant surprise. As far as conventional conforming loans, right now we have a special through December 18th. It's a 1/4 point price incentive on a conventional loan or an 1/8 on high balance. The good news is when you go into Quick Pricer, right, they'll go in, price the loan, which they don't really need a login for. They can just go to admortgage.com. At the top of the page, it says Quick Pricer. When they price the loan, that incentive is added when the loan is locked. So if you have a credit of a point, you actually are getting a credit of 1.25 points. let's say on a conventional loan, right? Or 1.125 on a high balance. If there's a cost, let's say there's a cost of a quarter, well, now there's no cost. It's par. So we're doing that through December 18th. We want people to know that we do conventional conforming, and we just want to change the perception that we're just about non-QM. We do a really great job on non-QM, and that was a really big factor even for me. I had a lot of opportunities as an account executive, and I basically felt like this was a chance for me to do both and always have a backup plan for people and always be able to offer more. So that's what we do.
So Lori, to close us out, I have I think a great question.
Okay.
Is those borrowers that you have that may be so close to qualifying conventional,
Okay.
What are some maybe tips you can give these brokers to help their borrowers really qualify?
Sure. Well, first off, when someone's right on the edge, we have to rely heavily not only on the AUS, but all the things that we put into the AUS. So a really complete application is really important. People, a lot of times, so the brokers will leave off certain pieces of information.
Assets.
It could be, right. It could be the type of asset. And so it could be a number of things. So it's really important to have a very thorough 3.4, make sure your IRLA is perfect and accurate, right? So that's one thing. The other thing is, I've seen the AUS not given approval at a 37 DTI. So not everything is, what you think it is. It could be, and that was on a cash out refi, and it was a couple years ago. But the point is, the broker had to keep massaging the loan and working with me and with our underwriter to get it to approve. And so, you can't take anything for granted. You really need to know the loan. You need to know the data that you're inputting and make sure it's accurate. And then the other thing that I keep saying, and I've said it a couple times here, is the plan B. So there is times, brokers will call and they'll think they're going conventional or non-QM one way or the other. And I'll make a suggestion because really it's very close, or it may not fit, or they just can't get that AUS approval. So I think it's important to be able to have those conversations and know the loan. The other thing that is important is that I think the broker needs to set themselves up for success with the borrower. I'm a licensed MLO. I don't originate loans, but I keep my license, my NMLS number. And I'm proud of that because I feel like I understand what they go through. I know the standards that they're held to. But I did do retail for a short time. And I can tell you, I love wholesale. I'll always do wholesale. I would never compete with my brokers anyway. But anyway, setting the borrower up for the expectation that you may come back to them for more info is really important. Because a lot of times, especially if you have someone who, they're a very educated borrower or they're a very savvy consumer, they have really good credit or they have a lot of money, they feel like, look, I don't need you. Why are you asking me for this? And it can be really tough on a broker. And so I think they really have to work with the personality of the borrower, but they have to mention, like, look, I get it. You're the perfect borrower, or your loan appears to be a slam dunk, but I may come back to you for some information. And when I do, I'm going to work with the lender to do exactly what I told you I was going to do up front. And I feel like if they could just be honest and make sure that borrowers know, hey, I may come back to you and it's not that big of a deal. We are giving you $1 million, or we are giving you a conventional conforming loan would be less than that, but we're giving you $400,000 or even $50,000. It's a loan that the lender is obviously extending, and we may have questions. So I just think setting themselves up for success there is a great help. But we'll always help along the way, and we're here to help on every single loan. So
yes, we are. Yeah. Thank you for being here with us today, Lori, and thanks for visiting the new office.
Oh, thank you, Serena. It's been a pleasure. Thanks for having me.
Anytime. Please be sure to thumbs us up on YouTube, follow us on LinkedIn, and follow us on TikTok. See you next time.